Howdy, everybody. Welcome to Liberty Call for Friday, January 31st, 2025. Hope you're having a fantastical day out there in the interwebs. It is a beautiful day here in Colorado. Well, yeah, there's a few clouds. It is warmed up. I think it's like in the 50s, which is woohoo. So as soon as we're done, I'm heading out. We're going to go and do some chores and get some dinner and stuff. And anyways, so I hope you have some fun plans for the weekend. All right. Well, markets are sliding as Trump moves forward with new tariffs, sparking investor concern, while German regulators warn of potential market corrections ahead. Meanwhile, big tech is keeping indexes afloat, with Apple and others posting strong earnings. On Wall Street, bank bonus disparities are stirring discontent, and major banks are rolling out fee hikes and rate adjustments that could impact consumers. So before we dive in and break it all down, I need some help from you. If you could give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All righty. Well, let's hop into today's markets. Dow Jones was down 0.75%, 337 points, closed at 44,544. S&P 500 down 0.46%, 28 points, closed at 60.43. NASDAQ down 0.28%, 54 points, closed at 19,627. The VIX was up 4.67 today. It's at 1658. Canada was down 1.01%, Brazil down 0.43%, and Mexico down 1.44. In Europe, Germany was down 0.07, the UK up 0.31, France up 0.11, the Netherlands up 0.32, Spain down 0.41, Italy up 0.12, Switzerland flat at 0, and Portugal down 0.16. Russian exchanges red today. MOEX down 0.67, RTSI down 0.47. And the overnight markets, the Nikkei in Japan was up 0.34%, Australia up 0.45%, New Zealand up 1.47%. In China, they are all still closed. All right, so we'll skip those. All right, easy peasy. All righty, let's bring up the chart and see how the markets did for the week. So 1 week, there we are. Where'd the week start? That was Monday. All right, so here's Friday. Starting out with the Dow Jones, it looks like it's going to be pretty flat, only up about 0.23%. The S&P 500 is going to be down for the week about a percent-ish. NASDAQ down 1.61. The Dow Transports going to be down 1.83, and the Dow Utilities, where's the last candlestick? There it is. Down 1.3. So looks like everything but the Dow was in the red, and the Dow just barely squeaked out a positive week there, folks. So, all righty. Well, that is that. So let's hop into the market or the economic data for the week. Starting out with initial jobless claims. They came in at 207,000. Forecast was 224. Previous week was 223. Continuing claims came in at 1.858 million. Forecast was 1.89. Previous number 1.9. Pages are taking forever. New home sales came in at 698,000. Forecast was 669. Previous number 674. New home sales month over month grew at 3.6%. The previous number was 9.6. Durable goods orders month over month contracted at 2.2%. The forecast was 0.3% growth. Previous number was a 2% contraction. And the consumer confidence index came in at 104.1. Forecast was 105.7. Previous number 109.5. The Case-Shiller home price index came in at 4.3%. Forecast was 4.2. Previous was 4.2. Goods and trades balance. We have a deficit of $122 billion. Forecast was 105. And the previous number was 103.5. Retail inventories, excluding autos, came in at grew by 0.2%. Previous number was 0.4. Wholesale inventories contracted at 0.5%. Forecast was 0.2. Previous number contraction of 0.1. GDP, first number for the first report for Q4 came out this week. Q4 GDP came in initially at 2.3%. The forecast was 2.7. Previous quarter was 3.1%. Pending home sales index came in at 74.2, previous number 78.5. Pending home sales month over month contracted at 5.5%. Forecast was 0. Previous number was 1.6% growth. The PCE price index, the personal consumption and expenditures index, shows 2.6% year over year growth, right on forecast. Previous number was 2.4. And the PCE price index grew by 0.3%, and same as forecast. And the previous number was 0.1. And I think this is the last one. The employment cost index grew by 0.9%, right on forecast. Previous number was a 0.8. All right, so that's all the data that came out this week. Let's move into the market recap. S&P 500 climbs as investors weigh Apple earnings in line of inflation data. Stocks ended the week on a high note Friday with solid earnings from Apple helping to lift investor sentiment, while inflation data aligned with expectations, easing fears of any immediate financial reserve or Federal Reserve action. The PCE price index, widely regarded as the Fed's preferred inflation gauge, rose 0.3% in December, up 0.1% in November. And on an annual basis, inflation ticked up 2.6% from 2.4. The core PCE, which strips out volatile food and energy prices, rose 0.2 for the month and 2.8% year over year. Meanwhile, personal spending surged 0.7%, outpacing expectations of 0.5% growth and showing that consumers are still spending despite economic uncertainty. Strong wage growth and a resilient labor market helped fuel this increase. This data follows the Fed's decision earlier this week to leave interest rates unchanged. Policymakers are adopting a cautious approach as they assess economic conditions, particularly the potential inflationary effects of President Trump's proposed tariffs and other policies. Apple helped push the markets higher, with its stock trading slightly up after executives projected modest sales growth in the second quarter, while iPhone sales dipped slightly in Q4. CEO Tim Cook reassured investors that the company's AI-powered Apple Intelligence features are boosting demand. Earnings highlights, starting with ExxonMobil. They fell despite strong earnings as weak refining margins offset gains from higher production. Colgate-Palmolive dropped 5% after missing revenue estimates. AbbVie soared nearly 6% as strong sales of Skyrizi and Rinvoq helped offset declining Humira revenues. And lastly, Deckers Outdoors plunged 17% after issuing weak full-year revenue guidance. With inflation data in line and earnings season in full swing, investors will continue watching for signs of economic resilience and the Fed's next move, which their next meeting is in mid-March. All right, let's dive into some data. The December personal income and consumption from First Trust. Mr. Andrew Opdyke put this report together, so let's see what he said. Consumers ended 2024 on a strong note with holiday spending surging, but inflation remains stubborn, complicating the Federal Reserve's efforts to cool the economy. Personal income climbed 0.4% in December and is up 5.3% year over year, driven primarily by private sector wage increases of 5.6%. However, government pay grew even faster at 6.5% over the past year, marking one of the largest increases in decades. Additionally, government benefit programs surged 8.1%, reflecting significant federal spending. With this, while this has helped sustain consumer demand, it raises concerns about long-term fiscal sustainability. Yeah, we should not be handing out welfare to people. Consumer spending surges. Personal consumption jumped 0.7% in December, with upward revisions pushing total spending even higher. Services spending climbed 0.6 and up 6.7 year over year, while goods spending increased 0.9 for the month, but only up 3.5% annually. This broad-based spending strength signals continued economic momentum, but adds pressure on the Fed to keep rates steady. The PCE price index, the Fed's preferred inflation gauge, rose 0.3% in December, bringing the annual rate to 2.6. Core PCE increased 0.2% month over month and 2.8% annually, showing minimal progress in fighting inflation. With the Fed already having cut rates by 100 basis points in late 2024, officials are now signaling a wait-and-see approach for this year. Housing market is facing headwinds. Pending home sales fell 5.5% in December, reversing November's modest gains. This suggests a potential slowdown in existing home sales in January, reinforcing concerns that high mortgage rates and affordability issues continue to weigh on the housing market. And looking ahead, with inflation still running hot and government spending potentially tightening in 2025, the Fed faces a delicate balancing act. Premature rate cuts could risk reigniting inflation, while a too slow response could dampen economic growth. That's awesome news. All right, one last article before we finish up from Zero Hedge: 11 random facts that show that America is rotting and decaying right in front of our eyes. This is written by Michael Snyder of themostimportantnews.com. All right, America is facing a crisis that many people fail to recognize. As societal decay accelerates across multiple fronts, the country is struggling with rising crime, economic instability, and a moral and cultural decline. All while most of the population remains glued to their smartphones, oblivious to the worsening conditions. Yeah, that's very true. The unfolding crisis. Several key indicators highlight the depth of America's troubles. First, the fentanyl epidemic. Drug related crime is surging across the country, with some cities seeing an 85% increase in violent crime. Soaring government debt. The U.S. Federal debt is ballooned to $36.2 trillion, up from $10 trillion when Barack Obama first took office. Remember that? Good old days. Economic instability, corporate bankruptcies in 2024 hit their highest level since 2008 financial crisis, while cargo theft set an all-time record high, exceeding 454 million in losses. Homelessness and poverty, food bank reliance is at an all-time high, and homelessness is growing at its fastest pace ever recorded. Government overreach, while criminals roam free, an Ohio pastor faces jail time for providing shelter to the homeless in his church due to city code violations. And moral and cultural decline. Study shows that smartphones are making teenagers more aggressive and detached from reality, further contributing to societal fragmentation. And finishing up, the need for change. Many of Americans' struggles stem from the failed leadership, excessive government intervention, and a culture that prioritizes convenience over responsibility. The essay calls for a return to these values of the Republic's founders, highlighting that many of them were in their 20s and 30s when shaping America. The argument is simple. If people want to save the country, they must make better choices and take action. I agree. It's headed towards a financial reckoning, and no one seems to care. All we can really do is just try and stay out of the way and hope we don't get steamrolled in the process. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. Give me a buzz. I'd be happy to help. All right. Well, hope everyone has a wonderful weekend, and I'll talk to everyone again next time. Adios.